Yeah, I'm sorry. Some local power issues there. Some router got fluctuated. So now I think it's back in line. You people are able to hear me?
Yes, Masha.
I'm sorry, some power issue down here today. Some 3 times it got fluctuated.
No problem.
Coming back, we are discussing about the ABC elongation, right? So we try again if I am able to get into this video. It's just killing me. Yeah. And now I'm going to get into slash. Yeah, got the video. So let me play this video. So one more place I would like to add the AB single price breaking, multi-day low, a 2-day or it can be 2-day or 3-day or more than low, but it should be more than 1 day low. Right? Multi-day low at A and B period. It's breaking multi-day or at A, B and B period. And C period forms a ABC elongation. C period forms an ABC elongation. It means a lot of single prints at B and C period, B and C period. C period forms a bigger elongation. C period forms a bigger elongation. In such a case, it is a fast trade. Look for momentum exhaustion. You have to look for momentum exhaustion, of course, or a confirmation from order flow, some sort of hammer pattern. We talked about this, and of course, some time back it was there in Nifty, right? So I think 2 days back, maybe if I pull out Nifty. This particular day, right? So this particular day we are monitoring. This particular day I was monitoring. There was a 3-day low has been broken down. 3-day low has been broken down. Letter A, B, and C got broken down, and in fact, letter C got broken. Letter C got broken what? 4-day low. but a lot of single prints are there. My comment was when the price opens inside the range, it broken previous day low, price B started coming down, letter C started coming down. By that time, the confidence was high because the previous day high has been taken down in a very good fashion. It was a high selling confidence, high selling confidence. In fact, it took the 3-day low also, confidence. But think about how the multi-day breakout is coming in. When the multi-day breakout is coming in at letter A and B and C period, it took the 3-day, here is the 3-day low. It took the 3-day low at the C period. I mean, in fact, B period itself took it down. B period formed a lot of single prints. C period formed a lot of single prints. C period took the 4-day low. So here is the 4-day low. C period took the 4-day low. And it started doing more activity above the 4-day low. What is the confidence here? Almost 4 activity happened over here, above the 4-day low. That is a low selling confidence. High selling confidence was there. It was taking down all the 3-day low, but when it's coming to the 4-day low, at that junction, the selling confidence there is not high enough. It is a low selling confidence, and you're seeing many rotations. And there are a lot of single prints to get cleared, right? So that is why we attempted on that day towards the single print zones. Price finally been reverted towards those single print zones. And in fact, when we are running in the webinar, there are no confirmation about that. But lately, the confirmation came. Maybe I'll show you here. Maybe lately, the confirmation came from the order flow. Initially, it was a kind of a hammer or something. But lately, yeah. So lately, it happens like this. Lately, price was falling down. It was an ABC elongation. It took the 4-day low. It was a lot of activity. Nothing was happening. And lately, one of the day, we are getting this RD long momentum exertion pattern. RD long, because price was going sideways. So one of the sideways pattern, it forms an RD long, indicating that momentum exhaustion. And again, a momentum exhaustion. And again, a momentum exhaustion. If you remember that day, we are talking about clustered buyers, came at the day low. That day low at the C period low was momentum buyers. Maybe I'll show you, I'll open the video and I'll show you how we talked about it. If you're not able to recollect that video. It's on 21st, right? 21st morning.
Okay, anyways, I'm gonna skip a couple of things here because
There might be a, I convert into an 8.
You can, what you can do is that you can go and look into this video at your own pace, because you cannot, we will be missing so many things. If I'm going to run
a lot of buying activity.
If I'm going to run this video, we'll be missing many things.
Sir, I will take a look.
So the only thing is that ABC elongation, how to spot the momentum exhaustion pattern, and from the order flow, how it confirms that it's a momentum exhaustion is happening there. That is what it is discussed. So anyways, we'll be discussing in the order flow videos also. If there are any live setups, I will show you those videos as well. But one of the things is that ABC elongation is one of the, with a multi-day breakout, is one of the place where you should look for a momentum exhaustion that can be confirmed with order flow. Right? That's what the whole video is all about. You can look at it at your own pace. Anyways, the video is already there with you, right? And okay, coming back to the slide. So now how to visualize inventory conditions, right? So on what are inventory conditions is all about. Market, all in a sudden, it will not get long to too long, or it will not get into short to too short instantaneously. It takes a long time to build structures, and the process takes time. And then we can visualize the day time frame, whether the day time frame is getting long to too long, or short time frame is getting long to too long. or who is exactly getting long to too long. That's what we will be able to assess from the inventory conditions. Right? You can also assess inventory conditions via profile. You can also assess inventory conditions in terms of order flow. So one of the plays is like where the look into the scenario. This is from Nifty November 2017 contract. Look into the amount of information it is happening over there. So one of the day, this is on 23rd of October. 23rd of October, we got a poor low. So that's a poor low over here. You can see that that's exactly a poor low. Poor low is an indication that I'm dealing with whom? I'm dealing with short-term buyers here, right? So poor low formation is nothing but an indication of a short-term buyers. And again, I'm seeing one more poor low. There is one poor low here. This is one information. That's what we call it as a market-generated information. Market is showing that who is in control in that particular day. So a poor low is an indication that short-term buyers are present in that day. And second time, I'm seeing one more poor low over here. So one more poor low. So again, one more indication that short-term buyers are present in the markets. In fact, I'm having one more market-generated information. It's in the form of a prominent point of control. That is also an indication that I'm dealing with shorter time frame players again. So all are indicating that I'm dealing with short-term buyers. So two poor lows in a row, one prominent point of control. And now as you go by, you can find one more poor low here. All these poor lows are not even tested. So I'm talking about untested poor lows, untested prominent point of control, and one more poor low formation. You can see that it's one more poor low and one more poor low. That is also not clear. Almost by this time around 10:31. If you look into the value was continuously developing lower. Value was continuously building higher. It never given up. And it also creates one more prominent point of control. That is a sixth information. This is a sign that the inventory is getting long to too long. So, right? So because there are total how many poor lows in a row? 1, 2, 3, 4. 4 poor lows in a row and 2 prominent point of control. All are indication that the inventory is getting long to too long. And again, if you look into one of the day here, this is an AB poor low and one more poor low. So if you look into that, total 6 poor lows are there. And if you look into the prominent point of control, 2 prominent point of controls are there. So 2 PPOCs are there. All these are indication that the inventory went long to too long, or the inventory is dangerously long now. So who onboarded all these places are nothing but only short-term buyers. The short-term buyers are everywhere, right? So you know the nature of the short-term players, right? So they can hold the to a period of up to 3 to 10, 15 trading days, right? So count the number of days. How many days it happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 11 trading days has been passed by. All the 11 trading days, most of the days are dominated by the short-term buyers, right? So now, if there is any serious liquidation is going to come, what you can expect is that there will be greater liquidation will be coming in. All these short-term players who onboarded, who is getting long to too long, they'll be exiting panickingly, and then that is why you'll be getting most of the reference level will get cleared when you see that the inventory condition is getting developed and the inventory is getting long to too long. It's one of the best opportunity to fade everyone, right? So that's a positional opportunity. These kinds of opportunity, it takes time. It's take time where the poor lows will not get faded, prominent point of control will not get faded. Again, you'll be seeing exponential poor lows, or you'll be seeing exponential poor highs. Right, so that is why you'll be able to visualize that the inventory is getting long to too long by looking into this observation. This kind of observation doesn't happen. It happens very rarely, once in a year or twice in a year. This kind of inventory setup happens where only the entire uptrend will be participated by short-term players. That is almost 600 points move from the 23rd October to 6th of November. the entire move, the entire 600 move is completely participated, not 600 but 500 plus points move. Entire 500 points move is completely dominated only by the short-term trading community. Right? That is where you can anticipate a liquidation, and you know why the liquidation has to come, because all the short-term players, they generally have a holding period between 3 to 15 days or maximum up to 30 days. So when they are liquidating, there will be serious sign that they're giving a lot of clues over there. This information we call as an exponential information, which brings the exponential odds to fade against all those weaker hands. Right? So all our short-term players means if somebody here who already bought here, they might come for liquidation. Who is already sitting in a profit, they might come for liquidation. Or once price started falling in, the players who were kept a stop loss over here. You can see here, it's a poor low. Again, it's a poor low. The difference is only 2 ticks. It's only 2-point difference on that day. It's also a weaker low also. It's a poor low and a weaker low. A lot of stops are sitting in this band. So when the price is going to hit this zone, a lot of liquidation. Either the participants who are already here, who would have been having a stop loss, they would have the first one to liquidate, or the one who is already having who entered in this band, they might liquidate, because all these guys are short-term players. Short-term players usually comes with a stop loss. Right? Maybe this is one of the threshold where market could go and revisit, because one of the thing is that 4 poor lows in a row. 1, 2, 3, 4, 4 and 5. In fact, 5 poor lows and one more. This is also an AB poor low. This is also an AB poor low. So total 6 poor lows in a row is an indication that the inventory is dangerously long too long. All those 6 poor lows are uncleared poor lows. And in fact, there are 2 more prominent point of control also, which again, it's not cleared. So those are the signs that this market is not going to, the market is dangerously long. So we call it as an inventory is getting long to too long. So anytime you can anticipate those short-term corrections can happen. So all, when it is happening, it happens with a high confidence moment in the markets. So
Master, I have one question in this.
Yeah.
So when this particular market having a lot of power lows, so
yes.
That's why you are saying the short-term players are residing here.
Yes, exactly. Not only because of this particular market condition, the short-term players I'm seeing in terms of number of power lows and number of prominent point of controls.
Okay. So in terms of long-term players, there won't be any power lows, right? It will be like one-time framing up.
You won't see poor lows every now and then.
Okay.
If you're seeing poor lows every now and then and it is not getting cleared, all those poor lows are initiated by short-term players. Yeah, maybe let's say if one of the day is an even day and long-term players are in control, very rarely it could turn into a poor low. But when you are seeing a poor low every now and then, it cannot be from the long-term players. Every now and then, because the players are watching levels, and every time the day low comes, they are buying. Again, the day low comes on the same day. Again, they are buying there. This has not happened once or twice. It happened six times in a row. 6 times in a span of 11 days, which is a sign that the entire market is dominated by the trading money. Right, so this is on 6th of November. But if you look back, you go back and look into the charts of 6th of November, you'll have a fair idea how the markets reacted from there on. Let me go to Nifty chart, Nifty daily. Okay, 6th of November. So I think 6th of November is where the 4-day balance happened. 4-day balance happened. Its price opens inside the range. It took the 4-day low. See that particular day, it took the 4-day low and closed below the 4-day low. Right? And that day was a double distribution day, in fact. and then it clears all the three or four poor lows in one shot, and then it clears the priming point of control and it clears other poor lows. So next 7 days it was a one-time framing down. It's where the inventory correction was happening. The inventory correction was slowly and steadily happening because the inventory was dangerously long. It's all our short-term players, all the who are on board over here in this trend, right? The entire trend was onboarded by short-term players. They are the one who is panicking and exiting out of the markets. So whoever will be grabbing is mostly institutions will be grabbing all those inventory. So it triggers a lot of liquidity. And if you want to tell a story, I could say like on the floor in the olden days, what generally happens is that everyone will be physically present in the markets. All the small trader, all the big trader will be physically present in the markets. There will be a blue jacket guy who wears a very costly jacket, who mostly does nothing in the market. So he'll be quietly simply roaming here and there. He'll be listening to the sound, only to the sound, and mostly he doesn't do anything in the markets. He'll be only listening to the sound, but everyone will be wondering what this costly blue jacket guy is doing, why he is not at all doing anything, and why he is mostly roaming here and there. But not at all doing anything. Everyone will be wondering, all the small traders will be wondering why this guy is not at all doing anything. So, but the blue jacket guy will be mostly listening to the inventory in terms of sound, right? So when there is a more noise is getting generated, he knows that a lot of short-term activity is happening. Let's take a classical example here. Let's say it's a 2-day high. We have a 2-day high here. And when yesterday high has been broken out, a lot of noise is getting generated, right? And that means a huge participation is happening from the short-term community. When there is a lot of noise on the floor on those olden days, that means it sounds participation. More participation is coming into the markets. But still, he'll not be doing anything. Let's say it is breaking a 2-day high also, or let's say it's breaking 3-day high also. When 3-day high is broken out, the noise slowly fades out. The noise slowly fades out. Means now as the price started breaking 1-day high and 2-day high, a lot of noise got generated. But when it is breaking 3-day high, it creates very less amount of noise compared to the old noise. Now he knows that the blue jacket guy knows that the inventory is getting long to too long, but in fact he want to buy in this market. It's a bullish market, but still he want to buy. What generally he does is that he will push the price down. He's the first one to go and short the market with heavy volume, and he will bring the market down. Everyone will be wondering why this guy is all in a sudden want to short this market at the day high. Its markets is so bullish. Everyone will be trying to figure out why this guy is all in a sudden going with a huge selling quantity. When this guy is rolling up with a huge selling quantity, that liquidates all the players. That liquidates all the players who were initiated the trade over here, right? So the same thing was happening over here. When the inventory was getting long to too long, what institution does is that they use all their money supply to bring the market down. That triggers everyone's liquidity. Naturally, once it triggers, it creates an avalanche process. All they have to do is that they have to push it to a certain level. Maybe this particular day they would have been control, and their presence will be very minimal. But from that creates avalanche reaction that triggers the other short-term players will be removing the inventory on their own. That triggers a massive liquidity. So all of a sudden, the blue jacket guy, what he do is that he will automatically turn himself into a buyer. He turns himself into a buyer, and everyone will be wondering why this guy is now flipping the positions. Whoever bought here, they will end up selling everything to the institutions. They end up selling everything into the institutions. And that is how the institutions get their liquidity. Institutions, as I said, they play more of a liquidity game, and all the selling which was happening here, all the massive sellings which was coming over here, everything will be absorbed by the institutions, right? And that is where the long-term trend emerges from there. It's the same thing. It's the same analogy to the those olden days blue jacket guy who usually wait for the market to go for an inventory long to too long, but generally he want to go long, right? So he trigger shots and he pulls the markets down, That triggers a lot of liquidity from the short-term players. Once you are a buyer, next you are going to be a seller, right? So once those players are going to liquidate and they are going to become a seller, the institution absorb all those selling liquidity. Right. That is one way where you can figure out from the market profile exactly what is happening, who is responsible for what, and how the reaction could happen. You'll be able to anticipate it. The only thing what you cannot know is that how fast it's going to come. Is it going to clear in one shot? At times, when there is exponential information is there, at times they go and clear in one shot. At times they come in tranches. At times they might be doing a one-time framing. Slow. First they will hunt this. Again they will hunt it. They will hunt in a slow and steady manner. That triggers a lot of liquidity. Or they could also do like this. They bring it down. Again they go back for 1 or 2 days. Again they come down and they hunt it out. Or there are also days we had seen they push it down, and again they go back and test new highs, and again they come and bring it down this time really faster. So at times they come in phases, at times they come slow and steady. But only one thing is clear: whoever created all the inventory, most of the inventory will be corrected. Where you will see, and that gives you a tremendous positional opportunity to fade the markets, to fade everyone. In fact, to fade all those, to trade against all those short-term players. Okay, this is one way where you can. There will be a lot of exponential information. That's what I'm talking about. There will be a lot of exponential information, multiple poor lows, or it can be in the form of multiple prominent point of controls. Or there could be some other way it's saying that there are multiple ways the short-term players are participating. When you are seeing 5 or 6 or 7 kind of information only from the which is showing only the presence of short-term players, it is a sign that the inventory is getting long to too long. Not necessarily. At times you will be seeing only poor lows. At times you'll be seeing only prominent point of controls. At times you'll be seeing a combinations of poor lows and combinations of prominent point of controls. Right. So all these are the indications that the market is getting long to too long on a higher time frame. So next is this is one more interesting information that we call that as a back-to-back prominent point of control. Right. So one of the example which we've seen is in HDFC Bank. Once I done this example, I'll also again show you back the same HDFC Bank example how we seen this. So you look at this example. This is a chart from ICICI Bank on 16th of November. On 16th of November, you can see this information. One of the day we are getting a prominent point of control. There is one more prominent point of control, and there is one more prominent point of control. Both are uncleared prominent point of control. Okay, so we have back-to-back prominent point of control. One prominent point of control over here. Somehow I'm not able to write clearly. There is one prominent point of control here, and there is second prominent point of control over here. So there are back-to-back 2 prominent point of controls in a row. And when there are 2 back-to-back prominent point of control in a row, that is an indication that the inventory is getting long to too long. But what you should not do is that as long as you should wait for the next day. Don't go by the because there is a back-to-back prominent point of control. It is not an indication that you have to immediately go short. Right? What you have to do is that you have to wait for the market to come to your favor. Wait for one more day. Or what the market had done. Market opens gap up. In fact, it took multi-day high, and it at the A period, it rallied. It kind of an open drive is what it made. It almost broken 4-day high. Price opens above 4-day high, and it stays above 4-day high throughout the day. Right? So the entire day, the higher confidence was maintained. But what you got here is that lately you are getting a pullback low. You're getting a pullback low, and the very next day, price accepting, getting back into the below the pullback low, and it's doing a drive. That is one of the early clues that we are dealing with a higher selling confidence market. That is where you have to go and fade those back-to-back prominent point of control. Right? You can also see one more information down there. You can see if you look into the A period, it's coming exactly at the prominent point of control level. So as I said, it is again a weaker information, which is most likely to be get faded in a very, very shorter term. But the question is when. So the when question is all about when the confidence is turning. That is where the confidence comes. When you're seeing this information, you know what is the destination target. The destination target is that these both is going to get cleared. But how to when to target those levels? That is a question you have to ask. When you're seeing a back-to-back prominent point of control, should I have to target immediately, or should I have to wait for some more time? When you're asking this question, probably when the first thing is you have to wait. No matter what, you have to wait for the next day. Wait for the open. If the opening is showing weakness, you have to go on short. If the opening is going in a strengthening in a strength mode, you have to learn to wait again. So what is happening here is that it broken, as I said, it broken multi-day high, 4-day high. The entire day it stays above 4-day high, and it created a what? A pullback low. So these kinds of pullback lows are weaker low. So this is we already talked about the pullback lows. If you remember, this is a good strength in the pullback lows, right? Whereas this is a weaker pullback low. So if the retracement is more, that is a weaker pullback low, which has all the odds of price going down. So when the next day price open down below that, you initiate short and continue monitor towards those information. Your objective is to fade all those prominent point of control. There is one more weaker level there. That is also nothing but a prominent point of control. The objective is to fade this information, right? And that happened. In fact, it also created an excess. Also, this day is an it had a good excess. It also, this day is also an excess here. So this day it created a. If you look into the daily candle, it was something like this. I don't know how you call this, gravestone doji or something like that. So something like that, it created an excess. If you look on the daily chart, it was an excess. And maybe I'll show you the 11th of, 17th of November. We'll go back and show you the charts, how the charts looks like on the daily time frame. CC Bank. It is here, right? So these are the 2 days where we got a back-to-back prominent point of control. It's an indication that inventory is long to too long, and again there was one more excess, and then finally all the inventory got corrected. So where the price got initiated, everything got corrected in a span of it took almost 4 days to clear all the levels. 3 days to get, once the excess got formed, that is a sign that it could be a market top, because it's coming kind of an excess. And then, so most of the time you are seeing that a rally, pullback low, which was coming like this, most of the time you can expect a short-term correction. The moment price start accepting in, you will be mostly expecting a short-term corrections over here. And these kinds of things, mostly it happens at that swing top or a swing bottom. So a pullback low, how it is coming, it matters a lot. Maybe a pullback low, it's a steeper up followed by a late pullback. It's not even 50% retracement, not even 25% retracement. That pullback lows are an indication of an sign of a greater strength. But these kinds of pullback lows are a sign of, it usually, these are the pullback lows are a sign of a good excess. A good excess in the markets. A follow through indicates that you have to initiate a trade over there. That is why you have to initiate a trade, because your inventory is getting long to too long. You got an excess. Excess is an indication of what? Excess is an indication of what? Can anybody explain? Okay, anyways, I'll emphasize that excess is an indication of end of one auction and the beginning of a new auction, right? So uptrending auction ended over here and new downtrending auction begins over here. That's what it means. Playing a back-to-back point of control is very interesting, because every time it's going to be a different game. Every time you're going to see a different game over here. I will show you one more example. So this is one more back-to-back prominent point of control. What generally happens is that in a trending markets, a good trending markets will be dominated by a back-to-back prominent point of control. Back-to-back prominent point of control. maybe the entire zone market was trending, and probably if it is in terms of Nifty, that trend would have been yielded some 700 points or 600 points, and then followed by that at the market top it started balancing. Again it started balancing with, if you look into the value area will be only developing lower. Value area will be developing lower. What you have to do is that don't this is a sign that inventory is getting short to too short. The inventory is getting short to too short. Again, you can expect some more ramp to come, one more ramp to come. So when you are seeing this information, again, what you have to do is that wait for the high confidence to kick in. You don't know how the high confidence is going to come up, but if the high confidence is going to come up, that is where you are again going to onboard your trades at the opening itself. So you have to wait for is you have to wait for the market to show some high confidence. High confidence is where you're going to onboard, you're going to catch up the train, and we're going to play the game there. And it is again an indication, back-to-back Brahmin point of control. Again, you can see the Brahmin point of control. It was again exactly touching the one of the day high. It's exactly touching. That is still a weaker reference. It's a Brahmin point of control. One more Brahmin point of control. Overall price went down. Both the Brahmin point of control is not cleared. Sign of inventory getting short to too short in a very short time frame. So in a very short time frame, the sell-off happens, but then it doesn't continues. Again, the ramp up happens. Again, inventory pile up happens. Inventory pile up would have been happened. Inventory pile up again happens over here. So the very next day, price opens gap up. In fact, the gap up came very close to the 2-day high. You should be on a very high alert mode. You see a drive, it's a high confidence again. Go and get the open drive. Go and play towards the open drive, right? So because the inventory itself getting short to too short, and now there is a gap up and there is a continuation. So you have to go in the direction of the continuation there. You're getting my point? Any questions here?
So I have a question. So if the peacock is not overlapping to the previous one, and the first of November is getting gap up, in that case we considered like the market will come down.
You're saying like there is no overlapping, like means there is a two, let's say.
No, I'm saying the overlapping.
You're talking about overlapping like this. So
right.
there's one Brahmin point of control, and again the Brahmin point of control is touched next day.
Right.
Something like this. No, this doesn't make any difference to me. This is not we don't consider that as a back-to-back Brahmin point of control. When I say back-to-back Brahmin point of control, it is not at all cleared. Here in this case, just only it's a touch. It comes exactly, and then it touched it, and then it. I will keep this reference still, even if there is exactly it comes and touch, or if it exactly comes 1 point above or 1 point below, I will still keep this reference. When I will remove the reference is that a good activity comes, I will remove that reference. Then I'll say like it is not a back-to-back Brahmin point of control. If it is coming and touching this day and a lot of activity happened above there, I mean, it comes and touches, using some 3 or 4 single prints, I'll consider that Brahmin point of control got cleared. So we don't use that reference anymore. Right, but in this case, we are holding the reference because it comes and touches, either exactly touched or exactly 1 point above. It went above. Minimum, at least I will say that 2 or 3 ticks it is going above, then I'll say it got cleared. Right, so but there is an exactness over there. That is an indication that still it is an inventory getting short to too short. A short covering rally can be anticipated in this case.
Okay, short cover. Okay.
You're getting my point. So likewise, the same one of the situation we got through when at the start of the session, right? So we got in Bank Nifty. When in Bank Nifty, we had this information. There was a back-to-back Brahmin point of control. So one Brahmin point of control and second Brahmin point of control. And if you look into the E period low, it just comes and touches exactly or one tick below or above. I mean, exactly 1 tick above the Brahmin point of control. that is an indication that the inventory is getting long to too long in a shorter time frame. That is an indication that inventory is getting long to too long. So this is a reverse scenario where in a downtrend, let's say you're having a downtrend, and one of the days is a prominent point of control, and one more day of the prominent, we are getting a prominent point of control. In fact, one more day we got a prominent point of control. It's all these are indication that all these prominent point of control can be cleared in a faster manner. The reason is that still this low is a weaker low. The letter E is a weaker low. Why it is a weaker low? Because it's exactly one tick above or exactly coming and closing at the touching the prominent point of control and bounced exactly from there. It is a sign of a prominent point of control. And we also said, if you remember, there is a 45-degree line. There is a 45-degree line over there. So what I said is that immediately you can see some short covering rallies, but then it may not last long. That's what the commentary which we had. Because of this setup, there is a 45-degree line. It brings some immediate short covering rally, but that will not last long, because, or if it is not lasting long, that is a sign that you should be shorting the move towards point of control and point of control again here. That's how we discussed over there. If you looked at that particular day's activity, it was a low confidence buying throughout the day, and lately the sell-off happened, and that clears one of the prominent point of control. The very next day, it cleared one more prominent point of control. In fact, our target was the G3 low. If you remember, we said like there is a G3 low, there is one more prominent point of control, there is one more prominent point of control, and this low was mechanical, and there is one more prominent point of control. All are saying that the inventory is getting long to too long. Probably 1 or 2 days, we'll be anticipating a correction towards this low. That is how the top went, if I am right.
Yeah, you said it.
Yeah. So that is where we can expect a long liquidation, because the inventory is getting long to too long. These are the first people to liquidate. All are short-term players. They are the very first one to liquidate in that band. But after that liquidation, they liquidated, but then there is no serious correction went. Still, if you look into that, the low here is very mechanical. It's a weaker low plus a poor low. It's weaker low plus poor low. So poor low plus weaker low. This is, I'm still monitoring this, how the auction is continuing over here, right? And at the same time, you look into the top is also AB poor high. So it's going to be a kind of a confusion zones. There's AB poor high is also there. There is a poor low plus weaker low is also there. Both are having a higher auctions. Both are having odds of testing on both the sides. Maybe they will go test this and then they will go and take it down, or they will go and take this down and they will come back up. Something like this is going to happen over here. So how this auction is going to happen, how the opportunity is going to come, that's an excellent case study here. So you have to observe HDFC Bank, how this action is continuing there, so that you can remember in the future how you can handle when these kinds of situations are going to come, how you can play this game, these kinds of games better. Because there are odds on the higher side also, there are odds on the lower side also. Which one to focus first? Why? That is what you have to learn to do, because at times you're going to see this kind of mixed information coming into the markets. Despite that, you're going to follow the confidence. Confidence keeps you in the right side. You never know which is going to happen first. But if you follow the confidence, that will put you like, okay, which one you should follow now? Okay, higher confidence buying, so you fade the poor highs. Or if it is low confidence selling, then you again, let's say, this is my reference level. This is my reference level here. So let's say I'm seeing a low confidence. They come and cleared at the morning opening itself. They come and cleared, but after clearing it, they again got back into this range and activity started developing. In that case, you can initiate a chart and you can anticipate price to go and take this poor low and take this poor low as well. There is 2 poor lows in a row now. Now, if you look into it, there is 2 poor lows, one poor low and one more poor low, and it is also a weaker low. The 2 poor lows are back to back, right? So 2 poor lows are back to back. This is the one information you have to look into, but there is a poor high also. So maybe the auction may continue for some more time. It may create one more poor low, and the auction might continue, and it might come one more poor low. Then comes the balancing. lot of balancing happens, or prominent point of control happens, you see that it is coming with a point of control. It's coming up with a point of control. It is coming up with a point of control. The entire zone is still dominated by whom? The entire zone is still dominated by only by short-term buyers only, right? So this is just a sign that inventory is getting long to too long again. But the only thing is that you should not react immediately. Maybe if the price is coming down like a high confidence selling, you have to go and take this down because a lot of stops would have been pending over here. But if at all you are seeing low confidence markets or high confidence markets, the price could still go up. Still go up means to short this market, you have to still wait. There are tremendous odds here, but still you have to learn to wait over here. Maybe your opportunity might come at 2140 or 2150 or 2160. You never know. But somewhere the market will show you up where the opportunity is. You know what is a destination trade over here. The destination trade is, again, one more liquidation. Again, the inventory is getting long to too long. Again, you're seeing a lot of short-term buyers are present in these markets. But still, you have to learn to wait to fade towards everything, towards this poor low, because the structure itself showing it's a weaker auction. It's not a strong auction. What is happening so far is a weaker auction. And you have to be, is it the right time to short? No, not yet. You have to learn to wait for some more time, and then you have to take a trade over there somewhere. But if you think about going long, definitely this kind of setup is not a good setup for initiating, let's say from a short-term trade also, it's not a good position to initiate a long. Maybe if you want to go long here, you have to be a quick trader, you make some money, get out of the game. Something like that, you have to position yourself. Because always, anytime the shots, the stops could have been got triggered. So there is a poor low here, some stops would have been formed in this lower. And there is one more poor low there. It is also a weaker low. So some more stops are already would have been built in this band. So when the price travels here, it could travel a little bit faster. So that's the one thing you have to keep it in the memory.
Okay.
Right. So okay, now again getting back. This is one more interesting setup. Again, it combines with, if you look into this information, you'll be very much surprised how the bounce back happened, how the inventory getting short to too short. So one of the day, this particular day, high was exactly 10,400. It's exactly, price stopped exactly at 10,400. It's psychological reference. Price stopping at exactly at 10,500, 10,700 or 25,000, and sell-off is exactly happening at that mechanical reference. Again, those zones also initiated by the trading money. You're getting my point? Who watches exactly the round number reference? Or investors, they don't even care about it, right? So they don't come come and buy at 10,000 levels. They don't wait for such kind of reference level. They don't even care. Why an investor should care about exactly I want to buy at 10,500? Whoever waiting for that exactness, they are only trading money. Yeah, they could be a combination of intraday, or they could be a combination of short-term players. They are mostly trading money, and they don't give a solid commitment on their positions. They are mostly weaker hands, and wherever they are initiating their trades very mechanically, they are mostly, that zone is mostly a weaker hand locations. Auction mostly come and mean reverts towards those locations. Comes and revisit towards those locations. That is one information which you can get from the markets. And the price was coming down, which is good. Which is nothing but you would have seen that there are a lot of poor lows formed, right? So the poor lows formed, and where a lot of poor lows came. It is one of the day, it's an AB poor low, again one more AB poor low, where we anticipate a correction. This is the correction phase. This is the correction phase. This is a continuation of the correction phase. Still, this is the same November contract, November 2017 contract. But when it is correcting, yeah, you could see a lot of short-term. One of the day you are seeing short-term sellers there. Again, one of the day, again one more day, you are seeing an short-term sellers there, because there is a prominent part of control, and the market went down. It's again a sign that it's mostly dominated by. It's mostly dominated by whom? It's mostly dominated by short-term players. In this case, it is short-term sellers. Again, one more day, it's a balancing day. Price broken previous day low, but they formed a lot of activity. It's kind of an open auction outside the range, dull, boring activity. Again, it formed one more prominent point of control. Again, it is an indication that now we got a back-to-back prominent point of control. Back-to-back prominent point of control is an indication that the inventory is getting short to too short. Next day, price opens gap down. Price opens gap down. You can see that price opens gap down. And in fact, this day is where the Arcom default news came. Arcom default. Bond default or some issue was going on there during November 2017. And market lately broken down. It's a Friday as well. And Friday, it came up with a, despite global markets are again crashing, Arcom default is there, local news was going on, local negative news was going on. Everyone was anticipating a crash. Despite the crash, mid of the day market crash, and it forms a what? What is this pattern? What pattern you could see over here?
Rally.
It's a Friday rally high. It formed a Friday rally high. And Monday, what happened? You know what? All the same negative news was continuing on Monday also. Despite that, market opens gap up above the rally high. They straight away they go and they went on to taking those back-to-back prominent point of control. And in fact, the entire month they took the prominent point of control. So I'll show you. I'm not sure whether I have the continuation or not. No, I don't have the continuation. But what happened is that maybe I'll show you from the charts. This is November 15th, right? So November 15th.
Sir, I have a question here.
Yeah.
Sir, okay, if this is inventory getting short, too short.
Yeah.
So where we can enter here? So to get
acceptance of the rally high. Acceptance about the rally high. It's a first sign that high confidence is developing. Go and fade those both the prominent point of controls.
Okay.
Right. So if you look from the daily chart perspective, it will be like this. We'll go back to Nifty chart. Same November month. You see that this is where the, I'm sorry, not this one. So this is where the Arcom default date comes, right? So we have a reference, on that day we got a Friday rally high, right? And that day was, one second. That Friday rally high was somewhere around, if you look at the PPT, was around 10,160 level, 10,160 level. 10,160 level. So somewhere over here. So price opened slightly higher, mild positive bias, right? So all the negative markets are showing all the negativity. Still on that day, Japan was trading negative, Hang Seng was trading negative, everyone was trading negative by 0.5% or 1% down on that day when the Monday market open happens. We opened mildly positive and we moved up. We moved up and cleared the very first prominent point of control. In fact, next day, there was some rating on the upward rating came from Moody's or someone uprated the markets, right? So again, there was a next day which was gap up and cleared all the prominent point of control levels. And in fact, on subsequent days, it also taken down the, you see this particular day, the high was exactly 10,400 levels. And that also got cleared in a couple of days. So that is a sign that one of the places where you can see a dangerous markets where the inventory is getting long to too long or getting short to too short. In this case, you see in an inventory getting long to too long, and on the downside, what you see is an inventory getting short to too short. In general, the inventory goes in cycles. the market will be moving from long to too long, followed by short to too short, again long to too long, again short to too short. So you can see at the extremes where the inventory is getting long to too long or inventory getting short to too short. Those kinds of pattern you'll be able to clearly visualize from the profile. So those are the zones where you have a clear-cut understanding that in the short, who is getting long to too long? That is another question you have to ask, right? So whoever went long to too long is short-term players, and again, whoever shorting, these are again only short-term players are shorting, that you are able to clearly visualize in the form of a prominent point of controls over there, back-to-back prominent point of control, and then the Friday rally high is again a sign that what does the Friday rally high means? Usually the shorts which are coming in, the late charts who were selling below the value area are getting trapped. So it's a kind of an short sellers trap over there. So back-to-back prominent point of control, short sellers are getting trapped. Then what you have to look for is the high confidence to kick in. And the high confidence is coming in, that is where you have to step back into the game again to trade towards those. It's not going to be easy, right? So, but then trying to play these kinds of information, you will be able to position yourself better compared to anyone else. It's definitely not going to be easy, despite knowing all these things, right? So, but when you have this information properly, you know how to align yourself in the markets, which direction to align yourself in the markets.
Is it valid for stocks as well?
Yes, it's valid for stocks as well. So one of the example I shown you is from the HDFC Bank.
HDFC,
yeah. It's valid for every trading instrument in the world, as long as it is trading with some good liquidity. Okay, so what are the things we monitored over here? One of the thing is exactly 10,400 sell-off has happened. That is one reference level. It's a short-term reference level. So that we also call that as a psychological reference. And the second reference level is a prominent point of control. One more prominent point of control. These two prominent point of control back to back. It should happen back to back. I mean, today and yesterday, and or today and tomorrow, something like that. It has to happen back to back. Then only we can say like inventory is getting long to too long. Third day, we are getting a rally high. All these combination of information saying that inventory is getting long to too long, and one of this day, the short sellers are getting into a trap. All right. So again, that is where you have to look for a high confidence. A high confidence comes, go with the direction of the higher confidence, where your entry opportunity comes over there to fade. To fade quickly, what you can expect is you can fade this, right? Maybe to go to this level, it might take some time. That's what it happened. Quickly, you can expect the back-to-back prominent point of control to get faded. At times, it will be get faded in 1 or 2 days, and the other levels, it could take its own time to go and clear. Again, you look into this one more example here, how this is moving in. This is one of the example where how the inventory is getting long to too long again. So this is in Bank Nifty. This is Bank Nifty October. Bank Nifty October 2017. The Bank Nifty October was happening like this. It was a prominent point of control, and you can see the prominent point of control. The letter A get touched exactly, and still it's holding up. It's again this day one more prominent point of control, one more prominent point of control, one more prominent point of control. Again, there is one more back-to-back prominent point of control developing. So all whomever participating in this, all the 4 prominent point of control, you can see one more thing is happening there. The entire day, the first half an hour low is the top bottom every day. That is why I call that as a panic buying. Who is doing a panic buying is only the short-term players are doing a panic buying, and in fact, one of the lows here is very mechanical. Now all these 4 prominent point of control, all these 4, one got cleared, but otherwise the other 2 are uncleared prominent point of control. Again, these 2 prominent point of control are an indication that short-term players are getting long to too long again. So again, one more mechanical reference, one more prominent point of control over here. All are the indication that the inventory is dangerously long over there. What you can expect is an inventory correction. What is happening here is that we call that as an inventory adjustment. the inventory adjustment happens. So naturally, you can see the liquidation which is coming in mostly coming from the short-term players who went long. All the short-term community who went long on 5th of October, 6th of October, 9th of October, and 10th of October. All are short-term players, and the end result is it's happening in the form of an inventory adjustment. The same thing was happening over here in Nifty. In fact, Nifty was happening like this, almost 4 prominent point of control in a row without untouched. So and then one of the day price opens here, it started coming down and it clears everyone in a shot. In one shot, it clears everyone. But when it is coming down, it left a lot of clue. It left a lot of clue. You can see that if you look into the day's high, what you're finding something interesting over here at the day's high. At the day's low, also something interesting over here. The day high, usually most of the poor high, you will be seeing only 2 TPO letter at the day high. We call that as a poor high. But in this case, you are seeing 3 letters. 3 letters at the highs also, 3 letters at the low also. When you're seeing 3 letters in indices, that has higher odds of revisit over here. So what you can expect is that you can expect a revisit on the downside also, and you can expect a revisit on the upper side also. Maybe something like this. Initially, they will take it down, and again they go and get the high also. That is what you can anticipate. So this is just a liquidation. So the liquidation is done. Participations are out of the game. Now maybe this could be done by this could be triggered by the blue jacket guy. So now what you can anticipate is that you can anticipate that blue jacket guy to reverse, because he used his short-term position to liquidate. So he used his position to make the market push down. Initially he was trading money, but later on, once the liquidation has happened, he wanted to pile up in the market. So he will come and take this kind of. He would observe all the liquidity, and he will try to go long in the markets there. That's what you can anticipate when you are seeing multiple prominent point of control, multiple poor lows or poor highs. That will be bearish. That will be bearish only to trigger the inventory. Once the inventory got adjusted, again the trend will resume in the direction of the initially the short-term buyers, right? So market always hate these weaker hands. It's a kind of a shakeout of all the weaker hands, trigger the liquidity. That is where the long-term buyers will be waiting for to accumulate it. It triggers the liquidity. Institutionals comes and observe all those liquidity, and they took the market in the direction of their favor.
Master, I have one doubt.
Yeah.
So in this situation, do we need to consider the open drives? So here we can see the open drives here, right? So
they are not open. So you're talking about every day the market is bottoming out in the first half an hour, something.
Yeah.
Like that.
Right.
Yeah, it is kind of an open drive. It's kind of an open drive. Yeah.
So and also,
but
at the end of the day, it's not showing any greater confidence. Instead of it started balancing every day. So that means more and more short-term players are finding liquidity over there. More short-term players are interest. The participation interest is mostly from the short-term players.
Yeah. So when do I consider the open drive then? When should I go with that?
An open drive will be something like this. Let's say there is a 2-day high. Price opens gap up about 2-day high, and it does it. It's an open drive. Or let's say there is a Friday rally high, and price opens above that. Or let's say price opens here and it does a drive. Again, that could be an open drive. Open drive is where at the opening itself you see some high confidence, and that confidence maintains throughout the day.
Okay. So these things are just
yeah. Well, it's a bottoming out in the first half an hour, but lately they've balanced and it becomes a prominent point of control.
Okay.
Mostly they are just mere accumulation of short-term players. That's the only key information you can get.
Okay.
And you see a mechanical information over here, which doesn't last long. Mostly it will get corrected. As you've seen in the HFC example also, it got corrected. You've seen in ICC example also, it got corrected. Again, this is in Bank Nifty, same information over there. you get a correction over there. So these kinds of things cannot last long. It's a reference. You have to carry forward. It mostly price will revisit back faster.
So on the 9th,
It
okay,
will
on
not
the
take
9th,
10 days, more than 10 days or 30 days. It will be less than 5 days or less than 3 days. You can expect that
okay.
price to be get corrected. Yeah.
On the 9th October, can we consider that as a P shape?
Volume has to support. Otherwise, it is just a simple short covering rally.
Oh, okay.
If the volumes are not supporting, mostly it will be only dominated by short-term players. It could be only short covering rally, but not a fresh buying. Even if it is a fresh buying also, if the volumes are not supporting, the accumulation is only done by the short-term players. That is why we got a prominent point of control.
Okay.
Are we clear? Okay, I'm moving ahead. Again, similar panic selling is happening. Panic selling is happening here. Right, so panic selling, again panic selling, again panic selling, again panic selling. When you are seeing these kinds of panic selling, it's happening on every day-to-day basis. One of the day where you can see there is a panic selling is happening on. One of the day where you can see point of control is formed. It's a prominent point, kind of prominent point of control. And lately, point of control is not migrating because already it got settled in, and only price is migrating. This is how the this is how the inventory gets short to too short, where there is no POC migration and price is sliding down. So usually you can see price slides down, and slides down. One of the day you get a point of control. It's not migrating, and only price migrating lower. So previously you need to have a good trend. So that trend was there, right? And one of the day, it's where point of control not migrates, only price migrates. So all these are momentum sellers. We call that as a Momo sellers or momentum sellers. They are kind of a laggards. They come very last to the trend. And one of the zones, when you see this information, when you are seeing this information, that is a sign that the inventory is now dangerously short to too short. So you can also assess inventory from the spike levels also. Like those are the spike days where a good trend followed by a spike. You have to understand that we are very close to the market bottom, or somewhere the market is about to bottom out. That's the only information you can get from that. Next day also at the open, what we got is that price attempted to test the spike base. They got back into this range. It is what? It is not a good high confidence. So because we got a rejection there. A good confidence is where price opens up and it started trading above those points. That is a good confidence. But that doesn't happen. That doesn't happen over there. But instead, what happened is what happened is that we got a rejection and price started trading down below that. In fact, it took the multi-day low also. And price closed down. But if you look into the inventory perspective, the inventory was dangerously short. Next day comes the news that Infosys Narayanamurthy was back onto the board, and naturally it does an inventory adjustment. When it is doing an inventory adjustment, it also broke a multi-day high also. You see that 3-day high has been broken out. But lately, the price haven't sustained. Again, price started doing like this. Again, lately, again, selling got resumed back because it's a multi-day breakout. You can see a lot of single prints down there. Single prints, and single prints. It broken multi-day. Whenever a multi-day breakout is happening with a lot of single prints, it is a weaker sign. Price getting back and activity coming down, you can expect completely it could lose everything. So this is where this is one of the day where Infosys, Narayanamurthy came on board into Infosys again to take back control in the market. That is why we got a rally initially. 3-day high has been broken out, but that 3-day high came with a lot of single prints. Any multi-day breakout which is happening with this many number of single prints is a weaker sign. that is gonna roll back mostly back into this range, right? So if you want to look into the 4th of December, right? So this is 4th of December 2017. Maybe I'll go back to, I have the historical data in Miami Broker. I have last 7 years of historical data that we can check how the behavior was there on that particular day. So it's here. Let me pull up INFI charts. Put some candlestick chart studies. Basic charts, price. I'll go and get 30-minute time frame. Now what we have to move is we have to move to December 2017. This is 2017. I have to move to December 2017. September, October, November, and December. Here we are in December now. So what day it is? 4th of December is what Infosys Narayan Murthy took on board. Oh, I'm sorry, I'm in Nifty. I have to go to INFI. So here is 4th of November. It created a lot of single prints, right? When it is breaking out. One and two and three and four and five. It broken 3-day high also. But it comes up with a lot of single prints. That is one more clue that this day is going to be an mean reversion day. So any multi-day breakout with coming up with a lot of single prints, it is a sign that this is going to be a weaker day. That day is weaker. It finished all those single print zones, over here, all the single print zones over here, all those single print zones over here got clear. But if you think from the inventory perspective, the inventory was getting short to the inventory was short to too short. That information you can gauge from what? You can gauge from the point of control. Again, price slided down. That information says that short-term inventory adjustment can happen. So this is one zone where you can say like the inventory adjustment was happening, but at the same time it also says like multi-day breakout. So all these single prints could be faded on the same days. On the same day, price could touch, what was that level? 985 level. Is that 985 got cleared on that day? 985, but that day's low was around 985, right? So probably the price close comes end of the day that there are no single prints at all. End of the day, there are no single prints at all. All the single prints are clear. Again, there are two kinds of ABC elongation you have to look into it. One is multi-day breakout and inside breakout. Like you look into this information, letter A, letter B, and letter C, and you see that most of the ABC elongation, all these letter ABC are happening inside the range. Right? This is one kind of ABC elongation. There is a previous day range where price starts here, A and B and C. It took the previous day low. All these ABC elongation are happening inside the range, which is a sign that it's a kind of a weaker it's kind of a weaker setup. If ABC elongation like this, let's say A and B and C, I would have been considered this as it's a good elongation if it is breaking only one day breakout. But if it is breaking multi-day breakout, if this low is going to break out multi-day low, or no matter what, if most of the range is happening inside the day, if most of these ranges are happening inside the day, can expect only the single prints to get a fade. So you can expect all these C period single prints. Initially the C period, when it's breaking, expect this to clear and expect this B period single prints to get a clear, and you're out of the game. So one of the places where we say like the intraday inventory is getting short to too short. It also happened. I also explained with a couple of examples like multi-day when it is breaking. When it's starting down here, A, it broken previous day high. B would have been broken, or B would have been broken, and again C, it does an elongation. It's a multi-day breakout. It's a multi-day breakout, and you're seeing a lot of elongation at C period also, at B period also. A lot of single prints are there. It is a multi-day breakout. You can expect a mean reversion to clear all those single prints. It works for stocks also. It works for indices also. And usually these kinds of elongations, right, at the C period, you will be getting some sort of an momentum exhaustion pattern from the order flow. I'll show you a couple of examples which we discussed in the last. We discussed two ABC elongation pattern in last trade zilla. When we are dealing with tomorrow, when we are dealing with order flow, I'll show you when there is an ABC elongation, how you can exactly spot the day stop, and you can say that this is a day stop from the order flow. From the profile, you can say that it is a weakness, and from the order flow, you can confirm the top, right? So pinpointedly, you can say that this is a top, and now we can expect that that market has been topped out. Maybe you might see some activity developing over here, and you know that this is a top because market show that pattern, and you can fade all those single print zones, and that brings you a tremendous intraday trading opportunity to fade towards those all those single print zones. This has to be combined with order flow, or from if you are seeing a 3-minute chart or a 5-minute chart, you'll be seeing some sort of an hammer pattern which is developing at the day low. Some sort of an hammer pattern will be getting developed at the day low, which is a sign of an indication that the markets are showing some sort of momentum exhaustion. But you can confirm clearly what is happening from the order flow perspective. You can get a greater outlook that the momentum exhaustion is happening. So now you have to onboard with a very, very tight risk, right? So when these kinds of ABC elongation happens, so once every 3 months, it used to happen either with an inside breakout or multi-day breakout, which gives you an odds to fade those zones. So over a period of time, you should learn to bifurcate which ABC elongation to fade, which ABC elongation not to fade. I shown you a couple of examples which you want to fade, which one not to fade. The ICICI Bank example, if you remember, that is an ABC elongation, but we never faded that day at all. So maybe I'll go back to the ICICI Bank example. So this ABC elongation we never faded at all because it is not a multi-day breakout. First of all, it is not a multi-day breakout. First of all, the confidence is there at A period and B period, and C period also broken out. You see that B period itself price broken out. B period itself price broken out at the day high, right? And a lot of single prints was there. C period also broken out. So this particular day, if you remember, maybe I'll go back and show you how we looked into 8th of January. Right, so 8th of January, I'll go back and get you the January. This is it, right? Yeah. So the session started around 9:30. So probably ABC elongation means already C period would have been done. So we would have been somewhere over here.
It's with above the half. So not
mute for some time. Let's say still B period is going on. C period started coming in. So okay, so let's listen to the commentary here.
multi-day breakout.
similar setups, and it is also pretty close to clear. ICICI Bank, still that A and B and C elongation is going on. It means the confidence in ICICI is pretty high. Is that a multi-day breakout? It's not a multi-day breakout. If it's a multi-day breakout, then it becomes an ABC elongation, and we look for a complete mean reversion towards the center. Since it is not a multi-day breakout, we don't touch this. It's a high confidence market. This bank, it's about to close. Okay, so that's the thing. It's a high confidence market. So high confidence buying markets means you don't touch it. It means you should not do a mean reversion trade. You should not trade against the trend over there. A good trend is developing over there. So don't try to fade those single prints. That's the thing. So that means a strength can be anticipated in the subsequent that particular day. Strength can be anticipated. Don't try to fade that. It is one of the worst thing what a trader could do when the market is showing high confidence and it is not a multi-day breakout. Don't try to fade it. So over a period of time, you have to learn which ABC elongation to fade, which ABC elongation not to fade, right? So that you have to learn to bifurcate on your own. And okay, maybe this I will be talking out in relative to cumulative delta. Tomorrow we'll talk about this. I'm gonna give a skip to this.
Sir, can we take lunch break?
What is the time? Okay, yeah, we can take a lunch break and we'll resume back in the afternoon session then. Yeah, thank you. Session starts again again back around 2 o'clock exactly. Just be on time there. 2 o'clock the session will
Sure,
start.
sure. Thank you.